Hello everyone, George DeSantis here with the look at the market for the week ending December 8th, 2017. My dear brother's birthday, Errol. Happy birthday. Uh, yeah, I still have a sore throat. Um, it seems that every year around this time, there are certain viruses that insist on having an early Christmas party in my body. So I am accommodating them as usual. I feel better today, but than I did last week, but it's been hanging on. So let's look. We have I have some interesting things I'd like to show you this week. So let's get started. Um, we'll take a look at the disclaimer first. Trading and investing has large potential rewards and large potential risks. So read the rest of this and be sure that you realize that this video is simply for educational purposes and it's not intended to be advice to buy or sell anything. We are purely doing this for educational purposes. So let's begin by taking a look at some charts of the indices and so on. Well, here's a chart of the S&P 500 weekly, and a couple of things to note. We're still in an uptrend. The 4 EMA is still above the 9 EMA, and that is above the 30 weighted moving average. So relative to the moving averages, we still have an uptrend. We have the parabolic below the most recent bar, so there's no indication to switch to a downtrend. We have MACD trending up. We have percent R above the 60% line. RSI 12, very bullish, and also the directional movement index, DI plus, which is this green line here, is above DI minus, and we have ADX, the dotted line trending up. So the weekly chart is trending up. Now, so here's a daily chart of the S&P 500. Let's first discuss the usual indicators. The 4 is above the 9, 4 EMA above the 9 EMA, and that is above the 30 weighted moving average. So the trend is up according to these moving averages. Parabolic is still below the most recent bar, no indication to switch to a downtrend. MACD pulled back a bit, but that's because we had this drawback here to find support at the 9, by the way, and rally from there again. MACD pullback, so that's what we were looking at before. Williams percent R just staying above the 60% line. RSI 12, they're very bullish, and also the DMI index and the ADX is also looking to be in an uptrend as well. So all the indications here are that we're in an uptrend. However, we had this pullback here, as you know, last week, first 3 days of the week. So you remember that I sent you a video by Dan Gramser, a link to a video of a presentation that he did in Las Vegas at a Traders Expo. And he discussed candlesticks and his approach to using them, and also his swing trading approach using candlesticks. And if you go back and look at that video, you will see that he discusses an approach where one of the setups that he uses is looking for, on a daily chart particularly, looking for lower highs on 3 consecutive bars. When he gets that, he puts a buy order in. Of course, this is the S&P, so you won't be buying the S&P, but I'll show you some individual stocks. But I just want to show you the setup on the S&P here. And we have that setup. He would be buying right about here because he would be buying just above the high of this bar here. And then he would have trailing stops below the lows of these bars. And he would keep that trailing stop on, take off half his position when he breaks even, and then he would continue to trail the stops until he got stopped out. Excuse me. Well, let's take a look at the setups, and let's take a look at the scan that I did for this setup. So here are the conditions for this setup that I wrote into TC2000. First of all, I want stocks that are in a weekly uptrend. So I wanted the exponential moving average 9 to be above the weighted moving average, the 30 weighted moving average. So that's the first condition. The second condition is that if this is true, then I also want the daily chart to be trending up. So the 9 must be above the 30. The price history, we don't want very cheap stocks. I don't trade stocks less than $10 a share. So we want previous price history to be greater than $10. The volume, we want decent volume. So I have 500,000 shares a day. And that's the way that this setup is set up, so to speak. So let's take a look now at some individual stocks. So let's look at a few individual stocks to see how this works out. Remember, one of the conditions is that the weekly chart must be trending up with the 9 above the 30. So on this chart here, we have a daily chart. And we're going to take a look at a few individual stocks. And we'll see that this scan gives us a few possibilities. I'm not saying that we rush out and buy any or all of these stocks by any means. You need to have you need to know whether the stock is overbought, oversold, etc. But it's interesting. Three highs, boom, a new high. Well, stock breaks out of this pattern here. Take a look at the next one. Similar thing, right? Another one, similar thing. Another one, same thing. Another one. It's very interesting that we have these three highs here, and stock after stock, we can see you had those highs, descending highs, and because the weekly chart is trending up also, you get this breakout here. See, and here's another one. Wow, we have quite a few. Actually, we have 174 stocks to choose from. So I find this quite useful, quite interesting. It can be very useful. All right, so I just want to show you that. And what I'll try to do is to pick out a few of those that I think are looking quite much more interesting than others. And maybe we could focus on a few of them. And I'll do that and send them to you. All right, let's take a look at some of the stocks we usually look at. Well, here's a weekly chart of Apple, and we can see that it's still in an uptrend. 4 above 9, 9 above 30. And MACD pulled back a bit because we became overbought here. We hit the upper Bollinger Band just about, and now we consolidated. So, but the parabolic is still below the most recent bar, and you have these moving averages above each other. So the trend is up. We have Williams percentile looking bullish, as well as the other two indicators here. So when we look at the daily chart on Apple, we see some of those setups again. We see this one setup here, 3 lower highs, and then we have market moving higher. So, I mean, it's very interesting. I'm going to keep an eye on this. Let's take a look at another stock. Here's Facebook, weekly chart. Interesting. We had a bearish week last week. And this week we have a harami, a bullish harami. We see this body is totally engulfed by this. And we do have the parabolic switching to a downtrend. So that's not a good sign. However, we were in the buy zone here, just between the 9 and the 30, closing there at this level. And then last week we printed this bar, which was a doji, and it's a bullish harami. So this is bullish. We'll take a look at the daily chart and see where we go from here. Excuse me. Now on the daily chart, you could see that pullback a week ago. And then last week we went up on Tuesday. On Monday we came down again, hit the lower Bollinger Band, became oversold, and then continued to rise. And notice the parabolic has now switched to an uptrend again on the daily chart. So to me, I'm still holding Facebook. Let's take a look at something else. Here's Netflix. There's a weekly chart. Interesting. It had a nice run up here, and then it consolidated for a while, pulled back even more, right into the buy zone. See, it closed. This is where it closed for that week, and it closed between the 9, the red line, red moving average, and the green one, 9 and 30. That's buy zone. And now, last week, we have this hammer, which is hammering out, bullish, hammering out a bottom. It's true that the parabolic switched above, just like it did with Apple, I think it was with Apple. But now we have a hammer here, so that looks well for the coming short term anyway. We'll see what happens. Now on the daily chart, you see that pullback reflected here in the daily chart, but it became oversold, hitting the lower Bollinger Band. Then we had this run up here, this, found support somewhere around here, and then it started moving up again. So last week we had that that interesting move by Netflix. Netflix, of course, on MACD. MACD is strengthening here. It's trending up again from below the zero line. So I expect Netflix to continue to do okay. But right now it's in bearish territory, let's face it. Here's NVIDIA, one of those tech stocks that got somewhat beat up last week. Well, a couple of weeks ago, 2 weeks ago. Last week it went down a little bit again, but it's finding support, it seems. It's in that buy zone. It looks very much like Apple and Facebook. A lot of these big, tech companies got beat up here, but they seem to be now finding support at that 30 weighted moving average. So I look for it to do better, and I want to show you something else. And as we turn to best choice to take a look at the regression channel, you'll see that NVIDIA became very oversold as it came down here, very oversold, and now it's working its way back up. So if one doesn't own NVIDIA, here's probably a good time to be looking to accumulate the stock. And if we were to change this to some of the other ones we just looked at, which is Apple, maybe we'll find a similar pattern. See, it pulled all the way back and became not quite oversold like NVIDIA, but how about Facebook? See, Facebook became very oversold like NVIDIA. Now it's working its way back up. And look at the earnings on Facebook. Let's take a look at another one. Here's Berkshire Hathaway, the B shares. Now you can see that it was very oversold here, and then it rallied and it became overbought. It can stay overbought for a while like it did here, but you want to be buying in this area and you want to be selling up here if you don't want to hold it for long-term trading, for long-term holding. So that's what Berkshire looks like. And you can see that with NVIDIA right now, it's at very oversold levels. So if you don't own it, it's probably a good time to be owning it. Now there are two ETFs that you heard me talk about before, and I own a fair amount of each of them. Well, recently this one here is FFTY, that's the IBD 50, and you can see how it became overbought and this collapsed into the oversold region, and now it's seemingly trending it back up again. And if we look at XLK, which is another one, you'll see a similar pattern because we had that drawback of all those growth stocks and it became oversold and now it's back up again. So these are the things we have to look for. And here's one of my favorites, as you know, Visa. And you can see that Visa pulled back. It became overbought here, pulled back to the oversold region, went up again, pulled back again, and now it's on its way up again. So I like this one. I mean, it's a long-term holding for me. I just feel it's a steady growth stock, and I'm holding it. Here's MasterCard, very similar chart, and they're both payment systems. I'm very fond of the payment systems, as you know. Same thing as Visa. Here's another one that fits into the payment systems. PayPal. I own some contracts, some call contracts, option contracts, and I bought it when it's about oversold, so I bought some here, some February contracts. I think that's about all we have time for today. I hope that my voice improves by next weekend, but you have a great night, and we'll talk to you again next week. Make some serious money.